Assalamu alaikum waro madalahiwarkatu. Hello, everyone. Welcome to this presentation. My name is Anaini Wolandari, a student from Management Class 22A with NPM 224111042. Today, I am excited to share insights on a very important topic, tax audit. In this session, we will discuss what a tax audit is, its objectives, processes, and why it is essential in ensuring compliance with tax regulations. So, let's dive into the topic and explore the key aspects together. What is a tax audit? A tax audit is a formal examination by tax authorities to ensure that taxpayers, whether individuals or business entities, have correctly reported their income and have paid the appropriate amount of taxes as required by law. The purpose of a tax audit is to assess whether the taxpayer has complied with the tax laws and regulations. This involves reviewing financial records, tax returns, invoices, and other supporting documents to ensure accuracy and transparency in the reporting process. The audit verifies that all income, expenses, and deductions are reported properly and that no tax evasion or fraud has taken place. The tax audit process helps identify any discrepancies or errors in the taxpayer's reports and ensures that they fulfill their legal obligations to the government. Tax audits are typically conducted by government agencies such as the Tax Office or Internal Revenue Service, which have the legal authority to audit tax filings. Why is a tax audit important? Tax audits are crucial for several reasons. Ensuring compliance. A tax audit ensures that taxpayers are following the law by declaring their income, expenses, and tax liabilities accurately. This helps create a fair tax system where everyone contributes appropriately based on their earnings. Preventing tax evasion. One of the most significant purposes of a tax audit is to detect any attempts to evade taxes. Tax evasion, such as underreporting income or overstating expenses, can lead to significant losses in government revenue, which impacts the country's ability to fund public services and infrastructure. Fairness in the tax system. Tax audits create a level playing field by ensuring that all taxpayers are held accountable. Without audits, some individuals or companies might avoid paying taxes, leading to an unequal distribution of the tax burden. Audits make sure that everyone pays their fair share. Protecting honest taxpayers. For taxpayers who have complied with tax regulations, audits help protect them by ensuring that they are not unfairly penalized or caught in the crossfire of fraudulent activity by others. Honest taxpayers are reassured that their reports and payments are in good standing. Improving government transparency. Audits help demonstrate transparency in how tax revenue is collected and managed. The government can demonstrate its commitment to accountability, and taxpayers can trust that their money is being used efficiently. Benefits received. Tax benefits are indirect. Even though taxpayers pay taxes, there is no direct reward or benefit received by the taxpayer. The benefits of tax payments are collective and enjoyed by the public as a whole through infrastructure development, healthcare, education, and other public services. Retribution, on the other hand, has direct and specific benefits for the individuals or groups who pay. Those who pay retribution receive specific services or facilities from the government, such as access to public facilities, e.g., parking spaces, markets, or hospitals, or the use of certain government managed services. The process of a tax audit. The process of a tax audit typically follows several key stages, including the following. Selection of taxpayers for audit. Not all taxpayers are selected for a tax audit. The selection can be random, or it can be based on specific risk factors. For instance, taxpayers who have large deductions, report significantly lower income compared to industry standards, or show patterns of discrepancies in their tax filings may be selected for an audit. Audit notification. Once a taxpayer is chosen for an audit, they will receive an official notification from the tax authority informing them that an audit will take place. The notice will include the scope of the audit, which may cover certain years of tax filings, and specify the documents or records the taxpayer needs to provide. The audit notification will also outline the time frame for the audit. Examination of documents and records. The core of the audit involves reviewing the taxpayer's financial records, such as income statements, balance sheets, invoices, receipts, tax returns, and any other relevant documents. Auditors compare the taxpayer's reported income and expenses with available records to ensure accuracy. Interviews and clarifications. During the audit, the tax authorities may require meetings or interviews with the taxpayer or their representative. The purpose is to clarify certain aspects of the taxpayer's records and address any inconsistencies or concerns. Audit findings. After reviewing all the relevant documents, the tax auditor will compile the findings. If any discrepancies or violations are found, the auditor will prepare a report detailing the errors and the additional taxes owed. The report may also include recommendations for penalties or fines if necessary. Final audit report. The audit concludes with the submission of a final report. If the audit finds that the taxpayer has underreported income or overstated deductions, the report will outline the amount of taxes owed, along with any applicable interest or penalties. Resolution or appeal. Once the audit is complete, the taxpayer will have the opportunity to respond to the findings. They may agree with the results and settle any outstanding tax liabilities, or they may choose to dispute the findings. If the taxpayer disagrees with the audit conclusions, they can file an objection or appeal through legal channels. In conclusion, tax audits play a critical role in maintaining the integrity of the tax system. They ensure compliance, prevent fraud, and uphold fairness for all taxpayers. While the audit process can seem daunting, it provides significant benefits for both the government and taxpayers. By ensuring accurate tax reporting, audits help maintain the public trust and ensure that tax revenues are used appropriately to fund essential services. Understanding the tax audit process and being prepared for it can help reduce the stress and risks associated with tax compliance. Thank you for taking the time to watch this presentation on tax audit. I hope the material has been informative and easy to understand. Once again, thank you for your attention. Wishing you all a wonderful day.